Good afternoon, everyone. This is Brad Matheny. I put out a video earlier today, simple setups for everyone to use, learning how to try to confirm or invalidate trade setups. And it's rather interesting here that I got a message from a friend of mine about BlackBerry, and he was asking me what I thought after this big move. And very big price rejection. I talk about price rejection a lot. Understand that I've been trained by some of the best people in the world for technical analysis, price theory, particularly Fibonacci, GAN, and others. I develop, or I'm trying to develop, something I call Tesla price amplitude arcs, which can be very helpful if used properly. But you could see these earnings data, we get big pops. We get big pops around this area, big pop here. And I'm talking about a big pop here is like a dollar. Yeah, 18%, a dollar, something like that. But understand this here, this gap downward was probably news. This recovery back up aligned very solidly with this lower channel here. You can see, let me get rid of that. You can see this lower channel is acted as support. Here's the primary support bottom. Here's rejection. Here's rejection very strongly. Come back down here, get below it, consolidate, reject, break up above the upside. And then we get the same thing here. In my opinion, folks, BlackBerry is probably headed up into this area about 8, maybe 9% higher. And I'll be honest with you, it could, if there's a good strong number coming out here in this earnings, which appears to be on the 28th of September, we could see it move up above 620, 625. Now, I'm going to go over a couple of charts and do the same thing I've been doing. I'm going to go to MJ because MJ's has a big solid breakout. Obviously, I've been drawing on it before, so we'll try to get rid of this. Rescale. And so now you look at this big breakout. What are we doing? Where are we going? Big, strong move in marijuana today. Let's drag this back over, shrink this back down. And what we're looking for is a breakout of a trend channel. So, come across these levels, we get a breakout. Come across these levels, we got a breakout right over here. Lower channel. Let's try to put the lower channel in. This is what I'm trying to teach you in terms of how to understand trend reversals, trend channels, and price volatility. Now, we have this lower range. We only have 2 points right here and here to confirm off of. We have a couple of others back in this area, but nothing really makes sense. This kind of makes sense, but I'm going to go right back to here. So we found this support. We started to break out of it. We rejected back down. We finally got some big breakout here. And this did take out this intermediate high, which is right here. These are fractal formations, and they line up as part of Fibonacci price theory. So right here, we had a good, solid breakout, huge volume. This is a very good opportunity here. You would have wanted to place your stop down below this lower level, 279 or so, setting this up. And again, this was news based, but same setup, guys. I'm using trend channels. I'm watching for Fibonacci price theory. I'm watching for rotation in stochastics and RSI, and I can determine whether or not something looks valid or not. So let's go over here to the hot list, and let's take a look at I don't know. Let's take a look at AMD. Okay, AMD got a bunch of lines on it. Get rid of some things here. Sorry, that's my friend who was asking me about BlackBerry. So look at this. Okay, well, let's go longer term. Take a look at what we're looking at. Very clear upward channel. So let's try to come across these levels. Again, I will go to here, come right across here, make this green because it's an upward channel, clone it. Now, why did I leave that one low? I'll show you in a minute. Why did I leave this one low as kind of a standout area? Well, again, the way I'm looking at is multiple price levels that confirm the target. This didn't really confirm the target. This was a kind of an extended basing pattern. You can see here, based, rejected, and then got straight back up above it. Okay. So now we have these upper resistance areas in this area, but we also have this big breakout with kind of a double topping formation right out here. So understand that this gives us a nice solid double topping. And then we consolidate back down. So we have to mark this. This is an extended downward trend. You can see that we have defined downward trending here. And because of that, we are in a consolidation phase in the midst of an uptrend. So I'm going to point this out to you, try to highlight these areas. Actually, we have more confirmation right in this area. And then we have a standout low right down here. Okay. We are in an uptrend because we have not broken this channel yet. You see right over here, we're still above this channel. We are in an intermediate consolidation phase in advanced microdynamics right now after this big blow off top back in May, June, July. And we need to be very aware that the real opportunity for this trade is setting up very quickly in this zone. So I'm going to point here to here, and I'm going to basically set this up like this. There's your opportunity zone. So you want to try to buy in this area near the lowest area of risk. The purpose behind this is if it rallies, we're going to see a move up into this area, or maybe back up into this area, or maybe even higher. But if we're wrong, we have very clear support right here off this low and potential support setting up maybe back over in this area. So given what we have a downward trending market. We certainly probably want to try to buy in around 102 or lower, right in this area. And if we can, that's great because our support channel right here would eliminate our risk to the downside or limit it to 3.67% roughly. Our upside target would be about 15.5%. So understand that we're setting this up in a manner that says, look, we're in an uptrend. We can see it. We may get a little below this level, which is why you've got to give some room, maybe down into this area for a potential rejection. But ultimately, if it rejects like it does right here, I want you to understand this. So coming down here, imagine you had placed your stop right in here. You tried to get long as it got in here. You got long, but maybe you got stopped out. Then it rallied back up right here. Okay, ladies and gentlemen, that rally is rejection. This is what is called price rejection. Think of it as it hit the wall, it couldn't continue. Buyers came in, drove it back up on moderately strong volume here. This is where, if you did have an earlier trade, you could re enter off of this bar, trying to catch this rally from basically here as high as you can. Now, I've shown you in the past how to use Fibonacci price theory and Fibonacci retracements to try to manage your stop going forward. So I'm going to show you, had we gotten in this area off of this low, we would want to have our stop roughly on the opposite side, which is 382 to 50 of this trend. So what we have here is we have our stop here. We reach this new high. We get above this new high right here. I would move my stop up into this area. Now it rallies up higher, sets up a high, consolidates, can't get above anything, then finally gaps. Wow, what a big move. I would then determine based on how far this has moved from 81 to 120. That's a $40 move, guys. This is where you want to learn how to adjust the lower end of your range. So you'll adjust the lower end of your range to come back into this area, the last pivot low that gives you a substantial move. And this again moves your stop into this area below the gap. We come back up, we establish a high, come back down here, base out, come back up over here, get very clear rejection. You see this very clear rejection. First time, okay, maybe just a pullback. Second time, right here, right across this level, you're looking at very clear rejection. Price is running into a wall. Now, at this point, you come here, you move up to the wall, and you look for the last pivot low right here, right in this area. And what is a pivot low? I'll highlight it for you so you can see. And you move, whoops, you move your stop up into this area. And eventually you get stopped out. So you had a pretty nice move from here, $86 up to 119.61, just following these simple rules. Now, what is a pivot high? What is a pivot low? Okay, NVIDIA's probably got a bunch of them. So, yep, this is daily. Let's find something else. Amazon. Oh boy, that's a little. I mean, it's got them, but let's try Ford. Yeah, okay. This works. Okay, I'm going to run out of time eventually, but what I'm going to do is I'm going to mark pivot highs and unique highs. Unique highs are highs that occur with a high that has not been reached in 15 to 20 bars. So here's a unique high, and then here's a secondary higher unique high. We come down here. This is not a unique high because price has already touched this level about 8 bars ago. This is not a unique high because price has touched it 4 bars ago. This is a unique high, and this because price has not touched it within 15 to 20 bars. All of these are unique highs, but you want to watch for pivots. Very clear pivot. So this is an intermediate pivot, and this is a very clear pivot. Okay. Now on the downside, we have the same type of scenario. So we have a downside pivot here. And again, that looks more like a checkbox, but we have a deep low here that did confirm as a pivot level here. Then we have another deeper low right down here. Then we get a secondary low right here. This is a standout low. This is a standout low. This is an intermediate low. They're all pivots, but there's a difference between, this is a unique low, a unique low, a unique low, and this is a standout low, meaning this is just an intermediate low. Now you come up here, this is an intermediate low. Why? Because it didn't have a clear newer low from the last 15 bars. This is a unique price low because there's been no price action in this area going back about 15 bars. This is a unique price low. This is a unique price low. And then we get a secondary confirmation here, which gives us again rejection. Now notice price rejection in this area. Tried to come down, tried to break below it, got rejected. Rolled back down, tried to get below it, got rejected. Rallied up, came back down, tried to get below it, rejected. Came back down, tried to get below it, rejected. Now, if you understand what I'm showing you with these new price highs and new price lows, here is another intermediate low. Trying to make them all the same color. Here is another intermediate low. And then you get kind of a double topping formation right here, which is a secondary intermediate or a third, fourth intermediate low. And then eventually you get this one down here. That's our last intermediate low. Each one of these lows, so as we come across here, because this is the last ultimate high, price must get above this level in order to attempt to rally. This is very, very important. If it's going to rally, it's going to have to get above the last major high, the last major unique high. These intermediate lows or highs as we're coming down act as intermediate resistance. So you carry this out. And again, this acts as intermediate resistance. This acts as intermediate resistance. This acts as intermediate resistance. And eventually this acts as intermediate resistance. Okay, so we have a series of levels here, but we have our ultimate lows around this rejection point. I mean, in theory, I should draw it down around these areas, but I like to look at the rejection points and try to pick the actual rejection level. Once we get above this low or this high here, this gives us a solid trigger that we want to try to look for a bullish trigger. This is a buy trigger. Okay. It's gotten above this level. It's rejected off of this low. Very strong volume, upward sloping stochastics, upward sloping RSI, above our last rejection level, two of them actually. Now we're looking to try to get in this market. Now we get this rejection here. Oh, a bit concerning. But as long as we stay above this low, well, after this trigger, we're looking for our new pivot low. We get a new pivot low back over here. Very short little pivot low right there. Make it in red again. And you'll see these go all the way up. And we get another one. Where do we get another one? Right over here. And then we get another one right around here. Each one of these operate as a new support system, while these operate as resistance. Each time we get above this level, and then this level, and then eventually this level here, this level becomes broken. We're at new all-time highs. This then becomes our new ultimate high, which means that we would be watching for this level to get broken. Then eventually this level becomes our new ultimate high, watching for this level to get broken, which it does. And then eventually this level up here would become our new ultimate high, which never gets broken. And again, I will just copy this and try to drag it up. Okay, that didn't work. Let's try to clone. So if you understand what I'm teaching you here, this is basic Fibonacci price theory. Price is always seeking new highs or new lows. If you follow price, even in this congested area, you can move back down to 120 or 60 minute, but it is always seeking new price highs and new price lows. It is always attempting to get above the ultimate high or the ultimate low. And when it does, it's always seeking to establish a new ultimate high or low. Now, let me show you this. Okay, an ultimate high or low has to be something that has not been touched or seen in the last 15 to 20 bars. So remember, this area here had not been touched or seen in 15 to 20 bars. Multiple confirmation and rejection in this area. This low now becomes our warning sign to the downside. You have these other areas here that become intermediate support. They're not ultimate lows, ladies and gentlemen. Okay, ultimate or unique lows are very major lows and highs. But ideally, this is what the system, what Fibonacci price theory is all about. So I will just continue to try to teach you. Now, we get up in this area, we've got resistance, we've got a new ultimate high. This one then becomes invalidated. So it's still valid. I mean, technically it's still valid, but it's no longer our ultimate high. It is a very strong resistance support area, but no longer our ultimate high. So now we have a range from this low here all the way up to this high here. Very big range in Ford Motor Company. And as you can see, we come down here, we get the rejection again right here. Can you see the rejection? And we're above our ultimate. Whoa. We are above our ultimate low. So see the rejection here, tried to get above it, couldn't, popped. Came down here, tried to get below it, popped. Came down here, tried to get below it, popped. So now, understand that we have a rotation here that is a standout high. Try to get them in the same color again. We have a standout high. And I have to check, but I believe, nope, that did not break it yet. Okay, so we are very close to an upside move in Ford. We come back over here, come back over here. Mark this green. So we need to see, this is rejection here. This is, again, concerning that we were very close to a breakout, but we need to get this